Hello, everybody, to the Bob Unger show, Bob Unger podcast. And we are going to speak to Peter Schiff of Euro-Pacific Capital. Peter is responsible for my epiphany economically, and for many other people. I was interviewed yesterday by a guy named Chris Marcus. And when I asked him how he discovered real economics, he said, by listening to Peter Schiff. And I'll bet that there are literally hundreds of thousands of people that can say the same thing. I first met Peter by accident when I heard a show he used to do right out of his brokerage, Euro-Pacific Capital, and I used to call in all the time. And after a while, it was like he was talking to himself, because I bought in hook, line, and sinker. So let me start out from the beginning, Peter. And I know that you went to regular public school, regular government school, Beverly Hills, I believe. And, or were you in Connecticut? Did you go to school in Connecticut?
No. I mean, I was born in Connecticut, but I never really went to school here. I went to school in New York, in Florida. Ultimately, I graduated high school in Los Angeles, Beverly Hills, and then I went to UC Berkeley for college. But don't hold that against me.
Well, I'm a lawyer, so don't hold that against me either.
All right.
So then I assume you majored in accounting or something in that field?
Yeah, I was a business major, so I studied accounting and finance.
And you took economics courses there, I assume?
I took a few. I mean, obviously, I argued quite a bit with my professors. In fact, a lot of people still remember me, from Berkeley. Not talking about not friends of mine, but people who were in the same classes as I, because they remember the arguments that I would have with the professor. So,
was Liz Clayman in any of those classes?
No. She wasn't. She started out at Santa Barbara, and then she transferred. What do you call it? What's that other town up north? I'm forgetting, but Santa Cruz. She started out in Santa Cruz, and then she transferred to Berkeley for a year. Then I dropped out for a couple of years, and by the time I came back, she graduated. And she also did a year in Paris, so only really 1 year. We had one overlapping year at Berkeley, but then we had the high school.
And when did you first start to learn real economics? At what age?
Yeah. Well, my father started teaching me economics from when I was a little kid. Oh, and by the way, too, the reason I'm so dressed up for your podcast is right before the podcast, I did the interview with Liz Clayman on her show, Clayman Countdown. So she's one of the few people that actually has me on regular television. I get on podcasts all the time, but, the financial media, they used to have me on a lot before my predictions of the financial crisis came true. But then after a lot of my predictions came true, they kind of dialed back having me on. And then they pretty much blacked me out, my predictions, I guess, became more dire. They just didn't want anybody to hear it.
Right. Their minds are made up and they don't want to be confused by facts.
Yeah, well, that's okay. Just allow my clients to make more money, because the fact that there's so many fools out there who don't know what's going to happen, that's what keeps the window of opportunity open longer for people who do know what's going to happen, to get out of dollars, to get out of U.S. assets, to buy gold, buy silver, to do something to protect themselves. Because if everybody knew that they had to protect themselves, you couldn't do it, because there'd be no one to take the other side of your trade.
I saw you on the Joe Rogan show, and you made a great point during that show, during that interview, wherein you talked about that of all the ignorances the American people suffer from, ignorance of economics could be the number one thing. And I would like to find out how your dad taught you. I'm just curious about that. Did he actually?
Well, probably the reason that so many people don't understand economics is because none of the people who teach economics understand it. And in fact, I think that if you have no formal education in economics, if you've never taken a class, never read a textbook, basic common sense will result in you knowing more economics than people who majored in it, who have PhDs in it, who are, who are actually professors or who are actually are advising presidents as members of the Council of Economic Advisors. Just a kid with common sense will basically have a better feel for economics than these guys. So that's the problem. That just explained to me how things work. And so I understood. So by the time I got, to high school where they had classes in economics or college, they really couldn't brainwash me because I really was prepared and understood the truth. And so the nonsense didn't really work on me.
I could just imagine that a wife comes home to her husband and she says, honey, you only made $100,000 this year, but I spent $500,000. And he would say, wow, you stimulated the economy. I'm so proud of you. Isn't that great?
Yeah, the multiplier effect.
I mean, this is literally, I think it was von Mises who said that whatever is prudent for a man to do in his own home or own household is prudent for a nation to do.
Well, people somehow believe that the laws of economics don't apply on a national level, but all a nation is a collection of households. And so if it doesn't make sense for any one household to just go into debt, then it doesn't make sense for them all to go into debt together. I mean, that's even worse. And today people just assume that the government has these resources to help out. I mean, I hear it all the time. Oh, people are suffering, so the government needs to come to the rescue. And in fact, everybody is going to get rescued by the government. All the businesses are going to get bailouts and government loans. All the unemployed people are going to get enhanced benefits. But where's the money coming from? I mean, the government doesn't have a secret stash of money. I mean, yes, it can print. It has a printing press. But people still don't get that just adding more paper money into the economy changes nothing about the economy. It doesn't mean there are more factories. It doesn't mean that we have more goods to buy with that paper money. We just have more paper money to buy the goods that already exist. So creating money doesn't add any value. What adds value is investment, is savings, is underconsumption and increasing worker productivity. But the government doesn't accomplish any of that. All it does is redistribute what's already there. But when it redistributes the pie, it actually eats a few slices for itself. So it makes the pie smaller.
I remember talking to Anthony Scaramucci. He used to be part of the Trump regime.
Well, he was there for like a week.
Yeah, right. So. And he was giving a speech about how great the economy was. At that time, he was still a Trump supporter. And I got up in front of about 300 people and I asked him, if this economy is so great, how come a piddling quantitative tightening, so-called, rise in interest rates causes the entire market to start to come down? Yeah. I asked him that question.
Well,
what would be your response?
Well, obviously, the fact that the president had to demand that the Fed slash rates not only to zero, but he's still demanding negative rates. That just shows you that Trump knew how weak the economy was and that it needed a crutch in order to limp along. It needed the Federal Reserve to prop it up. If we had a strong economy, it could handle normal interest rates. I mean, but no, we needed the same type of interest rates that we had when we were in the Great Recession. So how could you say we have the greatest economy in history, but then demand the same monetary policy when we had the worst economy, practically in history? So the whole thing was inconsistent. Look, Trump, when he ran, was honest with the public about how bad the economy was. I mean, he wasn't honest about what he was going to do about it. He just didn't say anything. So you could say it was a lie by omission, because the only way to make America great again was to really cut government spending. And he didn't want to talk about cutting government spending because then people who were getting the money wouldn't vote for him. So he just talked in broad generalities about how I'm going to make America great again. But at least he pointed out that the economy wasn't great, because you can't make America great again unless it's not great. And it wasn't great. And he was right about that. And the public was frustrated. They were getting lied to by Wall Street and by the Obama administration about how great it was. And here comes a guy who's honest and says that's a bunch of BS. The numbers are a lie. The stock market's a bubble. We have artificially low interest rates. It's all a mirage. It's going to crash. Send me to Washington. I'm a no-nonsense businessman. I'm not a career politician. I'm going to clean house. I'm going to shake things up. I'm going to drain the swamp. And that was the message that resonated. But, you know, as soon as he got to Washington, instead of actually doing what's necessary to make America great again, he basically did what was politically expedient. And he just pretended that it was already great. He like pretended that simply by being president, America was now great. And the reason he said it was great was because the stock market was at a record high and because the same phony unemployment numbers were now legitimate, right? So he changed nothing, but he just put a different spin on the same facts because now he was the president as opposed to the challenger. But, you know, now he's got no message. I don't see how Trump gets reelected unless some kind of major Biden screw up. We'll see what happens with these debates. But, you know, everybody assumes he's going to do terrible. Maybe he won't. I don't know. We'll see.
Well, I always question why they would even put up someone like Biden unless they actually.
You know, I don't think they wanted to, but, you know, they had no other real candidates. All the other candidates were so far to the left, and they kind of like, you know, took away each other's votes. So the only real alternative to all the crazies was Joe Biden. And so he just stood there while these idiots were talking about the Green New Deal and, you know, Medicare for all and all this nonsense. And he just let them battle out for all the idiot votes. And then he just got the votes of the people who are not quite as dumb, you know, and he was last man standing and he ended up with the nomination.
A few weeks ago, I think about a week and a half ago, Trump came out and said that he has created the greatest economic recovery in American history.
Look, Trump is a showman, right? Or I meant to say, though, what really helped Biden was the African-American vote. I mean, they were loyal. They didn't go for these Looney Tune candidates. They knew his name from his association with Obama. And that's really what gave him the nomination. He really held steady, you know, most of that African-American vote. But going back to Trump, look, Trump is a salesman. He's a good salesman. I mean, he's been selling stuff all his life. I mean, go back and look at his commercials for Trump steaks, right? These are the greatest steaks in the world, right? Do you really think that he thought those were the greatest steaks? Of course not. But he was selling them. They were his steaks, so they had to be the greatest. So that's the same thing he's doing as president. Now that he's president, well, the U.S. economy must be the greatest because he's the president. And so we must have the greatest economy. So he's selling himself the same way he sold his steaks. I mean, so why do people expect anything different?
And what are the metrics or the facts that negate the claim of the greatest economic recovery?
Well, I mean, it's not even close. We're living on life support, right? I mean, all we're doing is spending borrowed money. In fact, the reason this whole house of cards collapsed so quickly because of COVID-19 is because we were so ill prepared. Nobody has any savings. Everybody is living, you know, paycheck to paycheck. If you're an employee, people's, you know, workers have no money. The employers are leveraged up. Companies are leveraged up. The government is in debt. Nobody has any money. I mean, I made the point on the Joe Rogan show, and, you know, that when World War II started and the government needed money, the American public was able to finance the war. They had huge tax increases. Americans loaned the equivalent of trillions to the U.S. government. American families in 1940 had lots of savings, years worth of savings. Even after the Great Depression, they were solvent. They could support the government. No businesses needed a bailout. They were able to survive World War II, even though most of their customers were fighting a war in Japan or Europe, and then the ones who weren't fighting were busy helping for the war effort. Nobody was in hotels. Nobody was in restaurants. Nobody was taking vacations. But none of these businesses got any bailouts because they were able to survive. We didn't have all this debt. So what Trump was celebrating was a bubble, a gigantic credit bubble that was even bigger than the one that he criticized that was inflated under Obama. But all he did when he became president was encourage the Fed to make that bubble bigger because he didn't want it deflating on his watch.
Well, when you speak to most of the, what I call the Trump fangirls, and you mention all the debt he's run up, the deficit spending, the begging for more Politburo manipulation of interest rates, even into negative rates, they will tell you, oh, the minute we get a vaccine, the economy will be perfect like it was before. What do you say to them?
Well, it was a bubble before. And I don't think a vaccine is going to reflate that bubble. That's the problem. People don't understand that what we had before wasn't good and it wasn't real. But now that COVID has pricked that bubble, and the air was already coming out anyway. It didn't even need this pin. But once COVID came, it put a gaping hole, and then the air coming off faster. But what this exposed was how insolvent we are, because nobody has any money. And so everybody's going to be broke. Even if we get a vaccine for COVID, that doesn't repair the damage. That doesn't reflate the bubble. I mean, there's too big a hole in it to put the air back in. And probably before we even get a cure for COVID or a vaccine, we're going to have a dollar crisis. That's the whole point of what I'm warning people about. The dollar, which has been falling steadily, it's now down 5 weeks in a row. It's about to take out the low for the year. It's back below 95. Gold, you see what's happening. Gold was up $27 today. We're now, less than $50 from a record high. I think we're about 1870 on gold. Silver is up about 15% in the last 2 days, 9% today. It's almost $23 an ounce. It was just 18 and change 2 days ago, but we've taken out a 6-year high there. But this is a warning sign. These metal prices are going to keep going up, because the world is starting to realize the box that the Fed has put us in with all this money printing, and the dollar is going to crash. And that's going to end the party before we get the COVID cure. Because what's going to happen is, once the dollar really starts to fall, that is going to push up consumer prices in a big way in the United States. And it's going to put a lot more upward pressure on interest rates, because people all around the world are going to be dumping all their US dollar denominated bonds. Because if you're living in Europe or you're living anywhere in Asia and you've got a US dollar bond, even if it's not a treasury, even if it's got a decent coupon, maybe it's a corporate bond and it's yielding 3 or 4%. But if you realize that the dollar is going to lose 10%, 15% of its value per year, you're not going to hold on to that paper and clip a coupon. You're getting killed. So once the dollar starts to fall, all of our international creditors want out of all the dollar-denominated debt. Well, who's going to buy that debt? Nobody in America has any money. So the Fed is going to start printing more money to buy the bonds that nobody wants, because the Fed has already printed too much money. But now more money just, pours gasoline on that inflation fire. And so consumer prices are really going to rise. And that's going to destroy the value of these stimulus checks or any money that people have. But the problem is, at some point, right, when the official CPI numbers are well north of 2%, whether they're 4%, 5%, 6%, I don't know where, but at some point now, the Fed is, between a rock and a hard place, and it has to make a decision, right? Either it does something about the inflation problem and tries to save the dollar and stop it from free falling. The only way it could do that is to reverse everything it's been doing. So it has to shrink the money supply. It has to start selling treasuries, muni bonds, corporate bonds, junk bonds. It has to start liquidating its portfolio, its balance sheet, and shrinking the money supply, withdrawing the dollars that nobody wants from circulation, allowing interest rates to surge, not just go up to where they were, but way higher than that, and then let the stock market crash, the real estate market crash, banks fail, and force the U.S. government to slash government spending. Not only does it have to stop helping people, it has to actually start withdrawing what they think is help. They got to start cutting government spending, maybe raising taxes. And so either that's what happens, or what I'm betting is that there's no way that's going to happen. So instead of doing that, the Fed just says, screw it, we're just going to keep printing money and we'll just deal with that problem later. And so they just let the inflation go from 4% to 10% to 15% to 20%, because there's no way to stop it. When Volcker was chairman in 1980, and Reagan inherited an inflation problem from Carter, they were able to get in front of the curve because they let interest rates go to 20%, and they ate a bad recession. The recession we had in 80, 81, that area, that was the worst recession, the deepest recession since the Great Depression. Now, I think the one that we had in 08 ended up being worse, and now what we got now is worse. But at that point, that was the worst recession we had because interest rates went up to 20%. Can you imagine the severity of the recession we would have this time if interest rates even got to 10%? Let alone, I mean, we couldn't even handle 2.5%.
Well, you know what people will say, but Peter, if we don't keep printing money and giving the heroin addict more heroin, he's going to go into withdrawal and people will lose their jobs. What do you
Exactly. But you know what? People are going to lose more jobs if we don't. It's like you can say you have two choices: keep taking drugs, right? So you can stay high, or stop taking drugs so you can have withdrawal, or keep taking the drugs so you die of an overdose. So withdrawal, death, those are our choices, right? And I would rather have the withdrawal than kill the economy completely by destroying the dollar.
Let's talk about trade deficits. One of the big campaign promises that Trump made and campaigned on was he's going to go after China. And I guess he didn't know about Triffin's dilemma and what causes trade deficits. Talk a little bit about his policies, including the tariffs.
Yeah, well, I mean, the trade deficits weren't the problem. They were the symptom of the problem. The problem was our non-competitive economy, where we have too much government, too much regulation, and we don't have enough savings domestically because interest rates have been too low. So we don't have the productive capacity that other countries like China have. And so we can't produce the goods that the Chinese are able to produce. And as a result, we import them. And we have these big trade deficits. So if we really had a strong economy, we wouldn't have these big trade deficits. The trade deficits are symptomatic of how weak the economy is. Once upon a time, America had the largest trade surpluses. We made everything in this country. Even though we had the highest wages in the world, we had the lowest cost goods in the world because we had so much capital, because we had so much savings and so much economic freedom that the rest of the world just didn't have. But since America is no longer that industrial, powerful country that it once was, we've been surviving on imports, and we've been running up this debt, because whenever we have a trade deficit, we have to give the world an IOU. And so the world, has our financial assets. And so we're going into debt to consume, and the world is buying bonds or stocks or real estate. And so the country is getting poorer as we're selling off our assets in order to buy trinkets, in order to consume. And Trump was correct in pointing out that this is a problem that needs to be solved. But his solution was tariffs. That doesn't work. That doesn't address the underlying problem. That's like a guy is really sick, right? He's got a temperature, and instead of figuring out, why he's sick, or, maybe he needs some medicine, you just, try to, cool him down with some ice or something, so he won't be as hot. But what about why? What about what's actually wrong? Or, you guys got a skin cancer. You can't just put a Band-Aid on it and pretend that you cured it, because you can't see it anymore. I mean, it's going to get worse. So Trump didn't want to do what was really necessary so that the trade deficits would come down. All he did is put on tariffs, and that didn't do anything. And in fact, the trade deficits are bigger now than they were before he was elected. Even post-COVID, our trade deficits are still going up. Even that didn't bring the trade deficits down. And of course, Trump actually believes that these tariffs are raising revenue from the Chinese. The Chinese don't pay any of those tariffs. The tariffs are paid by Americans. Americans who buy Chinese products pay the tariffs. Or if they have to buy products made by somebody else that are more expensive because they didn't buy the Chinese because the tariffs made them too expensive, then they end up paying higher prices for goods, when if there were no tariffs, they would get a lower price. So it's the Americans that are suffering the tariffs, not the Chinese.
It's interesting that the time of Nixon taking us off the international gold standard around 1971 kind of correlated with him going to China and opening up China, and then China's rise as an economic power. Can you discuss a little bit about the role of gold in international trade vis-a-vis Nixon removing it?
Well, when we went off the gold standard, that's really what opened up our license to print. Because when we were on the gold standard, we had some kind of restraint on the ability to run deficits and print money because we had to have gold. And initially, we tried to get away with it by just running deficits anyway. But the world was like, hey, wait a minute, you don't have enough gold. And they demanded the gold. And then that's when we had a problem. And politicians either had to do the right thing and stop spending, or do the wrong thing and get off the gold standard. And that's what Nixon chose. He didn't want to do the right thing. So he did the expedient thing. But, even though the dollar got marked down dramatically, we had great inflation in the 1970s. The dollar lost a lot of value against other fiat currencies, against gold, against silver, against oil. It stabilized. Reagan kind of stabilized it in the early 1980s. And then, the dollar, they still held it as the reserve, even though we didn't have any gold to back it up. And once we realized that we could get away with this, that's what opened up several decades of this profligacy and this whole bubble economy and everybody buying stuff they can't afford and spending and not saving. And, this whole bubble that just popped was made possible by the dollar being the reserve currency without any actual gold behind it, because we could just print it. And that really is when our whole industrial base began to disintegrate, because if we could get products for free, why make them ourselves? I mean, if we don't have to do all the hard work and deal with all the pollution, if we could just let the Chinese make stuff for us and they'll take these little pieces of paper that cost us nothing to create, I mean, that was the deal we made. And so we were able to live off this. But the question is, why were the Chinese dumb enough to go on with it for as many years as they have? And that's the crazy part about China, about Trump trying to get China, or pissing off China without realizing that he's biting the hand that feeds us, that the Chinese are supplying a massive subsidy to the U.S. economy by providing us with a bunch of stuff that we didn't produce and that we can't pay for. But I think the ride on the global gravy train is coming to an end. And we may have escalated the process ourselves, but this whole thing is going to blow up. I think it's going to blow up soon. We're going to have this crash. And then, the scary thing is, it's all going to get blamed on capitalism. If it's blamed on Trump, Trump is associated with capitalism. Even though he's not really a capitalist, he's not a conservative. He's a big government spender, big deficit, cheap money guy. But he's supposed to be.
It's interesting that when Obama does something or Biden suggests something, they're socialists. But when Trump does exactly the same thing, he's a conservative free marketer.
Yeah. I like when they say he wants to get rid of Obamacare and replace it with something better. I mean, so he just wants to have another version of the same bad socialist program. He keeps saying, oh, no, we want to protect your pre-existing conditions. Well, that's what Obamacare is all about. I mean, we shouldn't do that, but he's happy that he got rid of the individual mandate. Well, the only way you can have the pre-existing conditions is if you force everybody to buy insurance. If you say, you can buy, the insurance companies can't discriminate on pre-existing conditions and you don't have to buy insurance, then what healthy person would buy insurance? Nobody. You would just wait till you got sick and then you would buy it.
Yeah,
the reason you don't wait till you get sick is because no insurance company is dumb enough to sell you a policy when you're already sick. So you have to buy it when you're healthy.
It's buying fire insurance while the fire is going on. That's how insane.
Yeah, I mean, no insurance company is dumb enough to write a fire policy. The only reason people sell you fire insurance is because they think your house is not going to burn down. And so they think they're going to keep the money. Now, they know if they write enough policies, somebody's house is going to burn down, but it's okay because most houses don't burn down. So with health insurance, they have to assume that most people buying the insurance policy won't need it because that's how they have money to pay the people who do need it. But if only the people who are sick buy insurance, then it's not insurance. It's just free medicine, which is really what they want. They want government-provided health care. They're a bunch of socialists.
Right. I know that you ran for the Senate, at least for the nomination. And ironically, you lost the nomination to Worldwide Wrestling, believe it or not, fake wrestling. And which makes sense because Trump also came out of that world of fake
Yeah,
wrestling.
he's a showman. He's very friendly with Vince McMahon, Linda's
Right.
husband, and in fact, he's got Linda as the head of the Small Business Administration. So
Right. Now,
they have close ties.
let's say the American people all of a sudden became a lot wiser and a lot more educated, and they voted for Peter Schiff for president. I wouldn't bet on it, but let's just hypothetically say that, assuming arguendo. So you become president, and people always will say, well, what is his solution? So they present you with one of these outrageous spending bills. What do you do when you get it on your desk?
Well, I veto it. I veto everything. I mean, if I was president, I wouldn't sign anything. I mean, the only thing I would sign was something that repealed something, right? Like when I ran for Congress, I didn't want to create any new programs or pass any new laws. All I wanted to do was repeal the laws that were already on the books, right? I just want to undo the damage. I was there to stop the spending, stop the deficits, stop them from raising the debt ceiling, right? Because the less government we have, the more freedom we have. So that was my platform was, hey, I'm running for freedom. I want to restore the freedom that the government took from you, right? Because everybody is running and they want to promise something, what they're going to give you. But they don't have anything to give you. They wanted to give you stuff, fine, don't run for office, just give away your own stuff. But saying that I'm going to, vote for me and send me to Washington because I'm going to steal money from other people and give it to you, right? That's not what I was doing. I just wanted to restore the liberty that was stolen from everybody by, career politicians for generations.
What else would you do to get the Titanic off the iceberg?
Well, look, I mean, we already have big problems. There is no quick fix. See, that's the thing. There's no like magic solution, right? Just like, if somebody came to me, and if you're, a health professional or, dietitian or, and somebody comes to you and they're like, fat, really overweight. They never, and they never exercise. They just sit around and stuff in their face with junk food, and they're out of shape, and they have, high blood pressure, and they're coughing, maybe they're smoke cigarettes. So they're just really a basket case, right? If they got COVID, that'd be it. They'd be dead, right? So in bad shape. And they say, hey, doc, what do I do? How do I get in good shape? How do I get healthy? Right? Well, he can't keep doing what he's doing. Right. So I say, look, here's what you got to do. Here's an exercise routine you're going to have. Here's a diet you're going to have to follow. Right. You got to quit smoking. It's like, wait a minute. I can't smoke. I can't eat all this junk food. I gotta work out. That stinks. So yes, you got to make some unpleasant choices, and change your reality. Right. There's no quick fix. I can't just say, oh, here, swallow this miracle cure, and you can keep smoking and keep eating junk food, and you're going to be just fine, because you're not. So the solution to all the problems is for the government to stop creating more and get out of the way and let the bubble deflate, because we can't build a real economy until the phony economy implodes, right? So that means a lot of people are going to lose money. Stocks are going to come down. Real estate prices are going to come down. Companies are going to go bankrupt. They're going to default. Creditors are going to lose. People are going to lose jobs. They're going to have to find different jobs. That's life. We're in a big mess. The government got us into it. They can't get us out. All they can do is free up the resources so we can get ourselves out. Right now, they're preventing that from happening. So it's going to be a difficult recovery, because we have to recover from generations of damage that the government has done to the economy. So we can't do that overnight. But the problem is, the longer we delay this process, the worse it's going to get, right? Just the longer the person who says they want to get healthy, the longer they keep eating junk food and smoking cigarettes, the worse shape they're going to be in. And the problem is, they may end up dying before they even get a chance to do the right thing. And that's the risk that we're taking as a nation.
One of the things that attracted me to Euro-Pacific Capital was that you don't just sell investments like most so-called stockbrokers do. You actually give out quite a bit of education. And for all the parents out there, you wrote a book essentially that a kid could read on basic economics. You want to talk about the book?
Oh, well, yeah. Well, that one is How an Economy Grows and Why It Crashes, which, people should get that book. You
Their
can get it.
kids also.
And there's a collector's edition. It has bigger pictures. It's in color, a little bit more material. But yeah, look, it just explains basic concepts that should be obvious, but they're not to a lot of people, especially because they've already been brainwashed by Keynesian, professors or teachers, and so they lost whatever common sense they may have had naturally. And so this book helps bring back by putting things in very simple terms. And what people understand is once you get how economics works in a simple island with just a few people, all the principles are the same when you apply them to an entire nation, right? It's like gravity works the same in a small room as it does in a country, right? So gravity is a law of physics. Well, economics is also a law. It's a science. And those laws, those properties are the same. It doesn't matter how big the society is. Those laws are constant, just like gravity is constant.
Obviously, Donald Trump never read that book in high school, but I would recommend that every parent get that book so that your kids can learn basic economics, because once you learn that, because you're certainly not going to learn it in school,
Yeah.
you can do
Well,
things.
and I'm, trying to educate people to understand economics so they understand why the country is in such bad shape and why some really bad things are going to happen. That it's not because of capitalism, it's because of government, it's because of socialism. And, I also, I want people to understand why they need to invest in the strategy that I'm recommending, right? Because you have to understand where the country is going to know that you can't just have the cookie cutter run of the mill portfolio of US stocks and bonds and think you're going to be okay. You're not. Once you understand what's going to happen to the dollar, that changes your entire perspective on how to invest, because things that, the mainstream considers safe are actually very risky, and assets that the mainstream considers very risky are actually more conservative, right? If you really want to conserve your purchasing power rather than just the quantity of dollars that you have, because at the end of the day, it may not matter how many dollars you have if they don't buy anything. And so that's what people want. They don't want dollars. They want the things that dollars can buy. And if dollars don't buy anything, it doesn't matter how many you have. So I want to preserve my purchasing power in foreign assets. That's what we're doing at Europe Pacific Capital. We're investing in internationally. We're getting good quality companies that have been around for a long time, that aren't going anywhere, that have good earnings, that pay good dividends, but they earn foreign currencies. They pay the dividends in foreign currencies. They're not dependent on the US economy, and they'll be able to provide meaningful sources of income when our economy is collapsing and we have massive inflation. And I'm getting people into gold and silver. I'm getting into these mining stocks, which I think represent, a tremendous opportunity. Stocks that could go up, 10 times, 20 times, 50. I mean, who knows? I think people are going to make a fortune in these gold mining stocks. I mean, gold itself is not about getting rich. It's about not going broke. People that don't own gold could be broke because their money might not buy anything. So gold is a conservative store of value to preserve your wealth. But I think these gold mining companies right now could actually enhance your wealth dramatically if you get in on them. Of course, there's risk. I mean, maybe I'm wrong, right? So you got to be prepared to lose money if I'm wrong. But, the worst thing that can happen is the stock goes bankrupt and you lose your investment, which is very slim because we're buying quality companies. So the downside, more realistically, is maybe 50%, 70, 80%. I mean, it's possible. I don't think it's probable, but it could happen. But on the other hand, if I think these stocks can go up 10-fold, 20-fold, 50-fold, I mean, the bet is skewed to the upside. I mean, the amount that you lose if I'm wrong is dwarfed by the amount of money that you're going to make if I'm right.
How did you manage? I first listened to you in 2005, and you were saying things at a time when I wouldn't know Ludwig von Mises from Donald Trump. And I heard you predicting that we're heading for disaster. And then I would follow you on the various Bubble Vision TV shows, and people would be denigrating you. They'd be making snide remarks. They would be mocking you. They would be laughing at you. How are you able, from a spiritual, psychological, and just courage basis, how are you able to sustain yourself through that? Because a lot of people,
Well, look, you know, I mean, I knew I was right. I had the courage of my conviction. And, you know, obviously I was vindicated when the financial crisis hit. But the way the media dealt with it in the future is they just didn't have me on anymore. Because, you know, once they thought I was just kind of a clown and I had all these kooky predictions, it was like, okay, it was like fair and balanced, or they, you know, I was kind of like a foil comic relief. I know I was good for ratings. But then once all the stuff I was saying actually happened, that maybe put a different perspective on things. And so I don't know, I think they were afraid of me being right again. And so the best thing to do was just to pretend I didn't exist. But you know, what's happened since that time period is I've been able to cultivate my own audience on the internet. So you don't need CNBC or CNN or Fox News, you know, or Bloomberg TV, right? I don't have to go on their networks to get an audience to hear me, right? I have my own podcast, The Peter Schiff Show. In fact, I looked at the numbers today. Right now, I've got the #2 business podcast and the #2 investment podcast in the country as far as the size of the audience. And that's just iTunes. That doesn't even count the people that listen on my YouTube channel. I've got now, as of today, 350,000 subscribers on YouTube. So I get, you know, 80, 100,000 additional listeners on YouTube than I get on iTunes. And even without those people, I'm still in the #2 position. You know, CNBC's #1 podcast, and they have several of them, but Kramer's Mad Money, he's number 13 in business. He's numbers, I think, 5 in investing. So I got a higher ranked podcast than the #1 CNBC podcast. So I'm reaching a lot of people directly now. I've cut out the middleman. You know, they're not, you know, able to keep my perspective. And I don't just get 3 minutes, you know, little segment. I talk for an hour usually on each of my podcasts. I mean, hell, yeah, Joe Rogan, I was on for 3 hours, but mine are normally a half hour to an hour. So people should go to schiffradio.com, listen to my podcast, tell your friends. You can also go to Peter Schiff, Schiff Report on YouTube. You know, you can listen to them there. I also have a lot of videos. A lot of my TV appearances are up there. A lot of special videos that I produce are there. I got a lot of content on my YouTube channel. So you know, you can be in there for months and months, you know, looking at all that stuff that I have on YouTube.
I know that you have children, and I know you have a son who does some blogging economically. How are you passing on this knowledge the way your dad, Erwin Schiff, who to me was a hero of mine?
Yeah, well, he's, you know, he already knows more than I did at his age. So he's like obsessed with it. So he reads all kinds of Austrian economics books. He's listening to podcasts all the time. So he's really kind of, you know, entrenched himself in Austrian economics. And he is also, you know, looking at the markets all the time. He has a portfolio of gold stocks that he bought on his own and silver stocks. And he's done really, really well because he didn't start investing really until a really, really good time. He started getting in around 2015, 2016. So he's got some really nice gains. Yeah. Well, he's only 17. So he, you know, by the time he had some money and had an account, you know, these stocks were pretty cheap. So he's really well positioned there with his, he even made some money in Bitcoin. You know, he bought it and got out of it and made money a long time, you know, more than I ever did. I got some free Bitcoin, then I lost them. So.
My son, David, my younger son, he's been following you for years. In fact, he took a photo with you a number of years ago with Ron Paul. And following your advice and also being lucky enough to start buying mining stocks way back around 2015 to 16,
yeah,
made about 120 to 150% on just about all of them. And that's because of you. And, you know, you deserve a lot of credit.
Well, you know, the opportunity is still there. I mean, these stocks, most of these gold stocks still have to double or triple to get back to where they were in 2011. And gold is only about $50 lower than it was in 2011. So there's a lot of stocks that have a long way to go. You know, silver too, at $23, it got to $50 in 2011. So silver still has a long way to catch up to gold. And, you know, I think it's going to gain on it. So there's a lot of opportunity. Look, the most important thing that people can do who are listening to this discussion right now is contact me through my firm, Euro Pacific Capital, and do something to save yourself. We can't do anything to save the country, unfortunately. There's nothing we can do. Our votes aren't going to matter. So, it's like this ship is going to sink, right? So the choice we have is, are we on it when it sinks, or are we in a lifeboat, right? And, if we're in a lifeboat, then at least we're in a position to help other people later on. I mean, we're in no position if we're drowning with everybody else. So you got to get your money off of this, Titanic of an economy, get out of the dollar, and I can build a portfolio for you that I can manage with my team. We're in Puerto Rico. I've got 4 portfolio managers, CFAs, that help me pick these stocks internationally. I got Adrian Day that works for me now, that manages my gold portfolio. He's been doing this for 40 years. He's the best in the business. He knows these companies. He knows the management teams. He knows the projects. So he's the best guy to hire to manage your mining stock portfolio. But, the window is closing. I don't know how many more days or weeks or months it's going to be open before the dollar falls through the floor. But you got to get rid of yours before that happens. You can't wait till there's a stampede, until everybody figures out what's already obvious, right? Because then there's nobody to buy, right? Then the dollar it's not a slow decline, it's a crash. Then gold just starts going ballistic. So quickly before that happens, give us a call. You can transfer an account over. If you have an IRA account or a pension, we can move that over to our custodianship, and then we can manage the money for you. I have 5 mutual funds. And by the way, too, if you don't want to transfer and work with me directly, my mutual funds are on Schwab, Fidelity, all of the discount brokers. I have 5 mutual funds in the Euro Pacific Fund family. I've got the Gold Fund, I got the Dividend Payers Fund, I got the Value Fund, Emerging Market Fund, and a Bond Fund. And to show you how quickly things can change, like when the year began, my Value Fund was really in last place in its category for the past 3 and 5 years, because I was buying stocks that other people weren't. And I had 1 star by Morningstar. Now, if you look up that fund, I'm in number 1. I'm number 1 year to date. I'm number 1 for the last year. I'm number 1 for the past 3 years. I'm number 1 for the past 5 years. And now I have 5 stars instead of 1. And all that happened just, in the last 6 months, because what I've been waiting for is happening. I've been positioning myself for an event that I knew was going to come. And you know what? It hasn't even finished playing out yet. I mean, I think my numbers are going to be so much better in a few years than they already are. So there's plenty of time now to get onto this strategy early in this move.
A guy like you, who obviously is very bright, and is obviously, one thing you do have in common with Donald Trump is that you're a great salesman. That the two of you have in common. You're not as big a socialist as him. As a matter of fact, you're not a socialist at all.
Well, who knows what he really is? I've never had,
true.
You don't know what he actually believes. All you know is what he wants you to know.
I don't think he knows what he believes. But the fact—
That's more than Joe Biden knows.
Right. He doesn't even know where he is. But one thing you could have done easily is you could have gone to work for any of the mainstream Wall Street crooks, as I would call them, most of them. And you could have sold regular stocks just like any stockbroker. You could have easily made a lot of money as a stockbroker with your talent.
Well, I did do that initially. I was at Shearson Lehman Brothers.
Yeah.
And I was there before. But look, I'm making plenty of money now. I mean, I'm not like crying poverty. I'm just, I started my own firm because I wanted to do it my way. I didn't want to do it their way. If I was doing it their way, yeah, I'd be telling you to buy, the same stocks as everybody else, because they wouldn't let me recommend what I really want, what I really thought was appropriate. They would want me, toe in their line. After all, if you work for somebody, you do it the way your boss tells you. I mean, that's the prerogative. If you open up a business, it's your right to tell your employees, what to sell, because it's your company and it has to reflect your philosophy and your viewpoint. But if you don't like that, then either you find a employer to work for where you share a common philosophy, or go start your own business. And that's what I did. I started my own business, right? Because I wanted to, recommend the type of investments that I thought were right. I didn't want to just do what my boss thought was right. And when I was working for somebody else, it wasn't my right to do that, because I represented an employer and I had to represent that employer's perspective. And so, but now now my workers, but I have brokers that work for me, and they make recommendations that reflect what I believe. And if they don't like that, they can quit and go someplace else. I mean, I think most of the guys that work for me really believe in what I'm doing. Because if they didn't, they would have quit and gone someplace else. So I think the reason that my guys are with me is because philosophically they agree with me and they like working here. Because, you know, if you really believe this stuff, it's hard to work anyplace else because you're like a square peg in a round hole, right? And so if you're a square peg and I got a square hole, I mean, it's a good fit.
Well, Peter Schiff, you are the Frank Sinatra of investing. You did it your way. And that's the way you've always done it. That's the way your dad did it. Yeah. And may God bless you and all your family. I've met them all. Wonderful people. And say hello from me to your beautiful wife. And may
I will. I appreciate all the support that you've given over the years. I know I've seen you. You always sit in the front row when I'm speaking somewhere. You know, if you're at the conference, you're there. You know, you've been a client for some time. You sent some referrals our way, so I appreciate that as well.
I'm a ventriloquist, actually. Take care.
Yeah.
Good.
All right.
Take care.
Bye.
Bye.
All
right. That was great.
Okay.
I don't even know how long we went.
We get a lot of new clients coming in. All right.
All right, man. Take care.